Have you ever felt like the market just has it out for you? You spot that perfect setup, you place your trade, and then bam, you just watch in total frustration as the price blows right past your level. Well, today we're going to pull back the curtain on why that happens. I'm going to show you how to read those invisible lines of support and resistance like a pro using nothing but the price chart right in front of you.
All right, so here's the plan. We're going to start by breaking down the number one trap that gets almost every new trader. Then we'll get into the secret pros use, thinking in zones, not lines. After that, we'll turn into price action detectives, learning to read the clues that tell us if a level is actually going to hold. We'll even get into some advanced stuff, like when these zones flip and fail. And to wrap it all up, I'm going to give you one single, powerful rule that'll guide your trading from here on out.
So let's just get right into it. We're talking about that horrible, gut-wrenching feeling when you think you found the perfect setup, you pulled the trigger on the trade, and then it all just falls apart.
Come on, we've all been there, right? You draw this perfect line connecting a few previous lows. Price comes down, touches it like a textbook, you jump in with a buy order, and then it just tanks, slicing right through and smacking your stop loss. It is so infuriating, and it makes you question everything. But what if I told you the problem isn't the market? What if the problem is the line itself?
Okay, this is where we flip the script. It's time to stop making those rookie mistakes and start thinking with the clarity of a pro. And the key is a really simple but really profound shift in how you see the chart.
So, look at the difference here. The beginner sees a single precise price, a line in the sand, and expects a perfect reaction. But the pro knows that big buyers and sellers, they don't all click the button at the exact same price. They operate in a general area, creating what we call a zone. Think of it like a battlefield where supply and demand are really going at it.
So let's get a handle on this battlefield. A support zone is just an area on your chart where, time and time again, buyers have shown up and stopped the price from dropping any lower. It's a floor for sure, but think of it less like a concrete floor and more like a trampoline. It's got a little give to it.
And this chart shows you exactly what I'm talking about. See that box? Notice how the wicks of the candles, those little thin lines, they dip down into the zone. That's the sellers trying to push the price down. But the most important part is that the candle bodies, the thick part, they're closing above the zone. This is the visual proof that buyers are winning the fight in that area.
And on the flip side, of course, we've got resistance. A resistance zone is the ceiling. It's that area where sellers have historically come in with force, smacked the price back down, and stopped it from moving any higher. Just look at this chart. You can see the price tries to poke through to the upside, right? That's what those long upper wicks are. But every single time, sellers show up and push it back down before the candle can close. The bodies are stuck below that zone. This is literally the footprint of selling pressure, telling you, hey, there's a pretty solid ceiling right here.
Okay, so we've mapped out our battlegrounds, but just knowing where they are isn't enough. How do we know who's winning the battle right now? Well, the secret is in the language of the candlesticks themselves. We just have to learn how to read them.
Okay, so let's look at the Euro-US dollar on the daily chart. Price has fallen down towards a really well-established support zone, an area where we know buyers have shown up before. Now, a beginner might just blindly put a buy order in as soon as the price touches the top of this box. A pro, on the other hand, a pro waits for clues.
And here come those clues. Look really closely at this. The first candle pokes into the zone and immediately gets pushed back up, forming that long lower wick. That tells us sellers tried, but buyers fought back. Then the second candle does the exact same thing, and the third. This sequence is a story being told candle by candle. Sellers keep trying to break the floor, but buyers are just absorbing every single hit.
And then, the knockout punch. This big green candle is called a bullish engulfing candle. It's called that because its body completely swallows, or engulfs, the body of the previous red candle. This is a massive statement from the buyers. They're basically shouting, okay, we're in control now. The zone has officially held, and this is the high probability confirmation we were patiently waiting for.
But listen, zones don't always hold, and learning to read the failure is just as important as reading the hold. So here we have the S&P 500 on the 4-hour chart. It's coming down to a support zone that has worked perfectly multiple times before. It is so tempting to just assume it's going to hold again.
But you have to pay attention to the character of the move. Look at the energy here. Unlike those previous bounces that showed hesitation and wicks, this time the price is just charging in with this huge, aggressive, full-bodied red candle. There is no sign of buyers anywhere. This is pure, raw selling momentum.
And there it is. The candle closes, and it closes with conviction, way below the entire support zone. There's no long lower wick, no sign of a fight from the buyers. The floor hasn't just cracked, it has completely shattered. This decisive break tells us the game has changed. What was once support is now broken.
Okay, let's level up. Because these zones, they don't just hold or break, they can actually switch jobs, and sometimes the market uses them to set some pretty clever traps. You have to know what to look for.
So on this daily chart of the Euro USD, we have a super clear resistance zone. You can see price has tried to get through it multiple times and has been smacked back down each time. Just look at all those upper wicks. It's a very obvious ceiling.
But then, look at this. A really strong bullish candle just smashes right through and closes firmly above the zone. The breakout happens. And right after, you see the price pulls back to retest the top of that old resistance zone. Now this moment right here is critical. Is the breakout for real, or was it just a fake out? And this, my friends, is the magic of what we call a role reversal. The area that used to be a ceiling is now acting as a new floor. Look at that long lower wick right on the retest. Buyers who missed that first breakout, they're now stepping in to defend this level, treating the old resistance as new support. This confirmation is a classic, high-probability entry for continuing with the trend.
Now let's talk about a really common trap. Here on the British pound versus the US dollar on the 4-hour chart, you can see price just pokes its head a little bit above a well-tested resistance zone. Breakout traders see this, their hearts start to pound, and they pile in, going long, thinking this thing is about to take off.
But then, on the very next candle, the trap is sprung. A massive bearish candle slams the price right back down below the zone, trapping all those eager buyers. This is a classic false breakout. You can think of it as a head fake by the big institutional players, designed to lure in retail traders just before they reverse the price and go hard in the other direction.
Whew. Okay, so we've covered zones, confirmation candles, breaks, flips, and even some dirty traps. I know it can seem like a lot to keep in mind, but honestly, it all boils down to one simple, incredibly powerful rule.
So if you only take one thing away from all of this today, please let it be this. Trade the reaction, not the touch. I'm going to say it again. Trade the reaction, not the touch. Never, ever, ever enter a trade just because price has arrived at a zone you drew. You have to let the market show its cards first. Wait for the story the candles are telling you. Look for those long wicks that show a fight. Look for those engulfing candles that show a power shift. Or look for those decisive closes that show a clear winner. That reaction, that is your signal. By waiting for it, you'll dodge the traps and only take the highest probability setups. In our next explainer, we're going to build on this and learn how to make sure we're trading with the overall trend on our side. Thanks for tuning in.